The stock market volatility has persisted here in March 2025. That's created more interest in dividend stocks like eBay because these types of companies are less volatile than most stocks, especially growth stocks, which tend to be more correlated with the market swings up and down. So if you're looking for a less risky investment, eBay could be an interesting one to consider. So I'll look at this company's revenue growth history, its cash flow from operations and returns on investor capital. I'll also look at the dividend yield, and then we'll look at valuation. I've done a discounted cash flow model on eBay, which I'll share with you in this video. And we'll look at valuation on a forward price to earnings and price to free cash flow basis to determine if eBay is a dividend stock worth buying at current prices. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So over the last decade, revenue growth has been almost non-existent for eBay stock investors. You see that volatility around the pandemic. Of course, eBay benefited considerably when shoppers were spending more time at home buying things online. And that was a brief moment not to be expected to continue for eBay stock investors. The company's platform is dated, it's difficult to upload new items for sale, and it's clunky, and they haven't made significant investments in that category. Still, eBay holds a strong market share in certain categories of online sales, things like selling sports cards. eBay holds a strong market share in that category. Those types of categories, collectibles and things that people like to sell to each other, not things that businesses like to sell to individuals. The B2C side of the business, eBay is not so strong in, but the consumer to consumer side of the business, eBay holds strong market shares in that category. So that's what eBay stock investors can expect looking ahead. Very, very slow revenue growth. If they can get it up to mid single digits being 4 or 5, 6% in a year, I think eBay stock investors will be thrilled. Even low single digits consistently, where they're generating 2 or 3% revenue growth, I think eBay stock investors can be pleased with that kind of growth. This is going to be a slow growing business that generates a lot of cash flow from those sales. So very slow growth, good profit, good cash flow, and asset light. So they're not going to be having to put up a lot of capital, which I'll talk more about. As a dividend stock investor, one of the things, of course, you look at is the dividend yield, and eBay's dividend yield is 1.64%. But remember, eBay only started paying a dividend in 2019, and it's been increasing that dividend. I wouldn't be surprised if eBay continues increasing that dividend for the next decade or two. So if you have eBay shares today, if you get eBay shares today, your dividend over the next decade, over the next 2 decades is likely to double, maybe triple in that time. And that's because the company generates strong cash flow from operations at 23.5% in the most recent quarter. Remember, eBay just operates the platform. It brings together buyers and sellers and takes a percentage of every transaction on the platform. That's a lucrative business model. Also, competition in the industry is easing considerably. Everyone is raising prices, everyone that I follow. And the companies that I follow in this industry are Etsy, which is increasing fees to buyers and sellers, eBay, which is increasing fees, Amazon, which is increasing fees, Shopify, which is increasing fees. So as a merchant, if you're trying to make online sales on one of these platforms, you look around and everyone is raising prices. So you get annoyed with the higher fees, but everywhere you look, they're raising fees. So it's not like you can switch from one platform to the other because the fees are higher here, but not there. And so this type of competitive dynamic is great news for investors. It's not good for if you're a seller or if you're a buyer, but it is good if you're an investor. The returns on investor capital at 15% are volatile, to be sure, for eBay. And some of this volatility has to do with eBay's acquisitive nature. Well, it acquires companies, divests segments, like it'll sell off its its e-commerce business in South Korea, for example, and then it'll spin off PayPal. It'll spin off its m- car business, eBay Motors, etc. And so it buys and sells, it harvests profits, and it's been pretty good at that. But it does create volatility in the company's returns on invested capital. Longer term, I'm confident eBay will generate strong returns on invested capital because, like I mentioned, they don't put out that much capital into the business. They don't own any of the inventory on the platform, and they've been very conservative in the investments in the platform. And, arguably that's what's led eBay to lose so much market share. It used to be a dominant player in the online space in the early 2000s, but it's fallen behind considerably because of that lack of innovation, that lack of investment. The platform still looks the same as it did 20 years ago, and listing items on the platform is inconvenient in my opinion, and they could do a lot better. And so if they were to make some investments, I think that would generate good returns on capital. But if they don't, the company's strong market share in the categories they operate will likely allow it to generate solid returns on investor capital for a sustainable time. So now let's look at valuation. eBay stock is relatively cheap, as you would expect for a slow growing company with very little growth prospects ahead. It's trading at a price to free cash flow of 17 and a forward price to earnings of 11.7. Similarly, when I did my discounted cash flow valuation for eBay, which by the way, you can see the full video. If you join my channel as a member, you can see the full video of my discounted cash flow valuation step by step for eBay. But in this video, I'll just give you my intrinsic value per share I calculated. It was $80 for eBay when the current market price is $67. So eBay, whether I look at it from a forward price to earnings, price to free cash flow basis, or whether I look at it at a discounted cash flow basis, the stock looks undervalued. The stock looks undervalued, even accounting for the company's very limited growth prospects. So to answer the question, is eBay stock a buy? I would say yes. I would say yes. I would say at current prices, eBay stock is a buy right now for dividend stock investors. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.